Hey there! Welcome to another episode of PhysicianEstate podcast. This is your host, Dr. Harsha Mule. I am the owner and operator of PhysicianEstate platform. I'm podcasting to you today from Miami, Florida. PhysicianEstate is a physician-owned real estate platform directed specifically towards doctors in USA. We provide free real estate resources and investment opportunities to physicians. We facilitate physicians to make wealth and keep wealth. On today's podcast, we will be learning about probably the most important step in real estate syndication investments: performing due diligence and vetting real estate sponsors. This is probably the most important podcast of the entire series of podcasts. This podcast dives into the intricate working details of real estate syndication deals. I strongly recommend that the listeners not familiar with syndication process first listen to the basics of real estate syndication deal podcasts and also the other podcasts on real estate syndication structure, pros and cons of syndication, profits in syndication, and tax strategies of syndication. Let's talk about a few introduction points of how to vet your sponsors. As a physician investor, the most important step in the whole investment process is making sure you select the right sponsor. You should master the vetting process in a real estate syndication project. Sponsor is the one who underwrites the whole project, and you want to be sure you work with an experienced and expert sponsor. Your sponsor is the one selecting a property, renovating it, managing it, and eventually selling it. Your sponsor will be the one making decisions on your behalf. When you are considering to invest in a particular real estate syndication project offered by a certain sponsor, you should start performing your due diligence and vetting sponsors. An investor should spend at least a few weeks or a few months, and there is no specific structure to the art of vetting a sponsor. In this podcast, I will mention 20 topics that an investor must cover to make sure they're successful and thorough in vetting their sponsors and the property. Let's get into the details. Point number 1. Experience and prior projects. Make sure your sponsor has experience working on syndications. Ask to look at the previous projects, the location of the previous projects that they were involved in, the structure of the previous projects, and the financials. If you can, take a field trip to look at the sponsor's prior projects. How long have they been investing in real estate? Have they done similar deals before? How are their previous deals performing currently? Ask them to elaborate on their best and worst performing deals. Point number 2. Ask for referrals. Ask the sponsor to give referrals of his business associates, prior investors, etc. Make effort to speak with the referrals to understand their prior working relationship with the sponsor and the work ethics of the sponsor. You will be pleasantly surprised at how honest people are. Number 3. Location. Where are the properties located? Are the prior properties close to the current property? Are the properties in gentrifying areas with positive population influx, with potential for further appreciation? Are their properties located in close vicinity to each other to accommodate ease of operations? Point number 4. Transparency. Keep an eye out for any responses from the sponsor that sound wavery. Any topics the sponsors are trying to skip. Stress on those topics and ask more questions on those topics. Sometimes the sponsors do not want you to know about things that may blow back on their face. You need to be skeptic and assume the role of a detective to get to the bottom of the details. Optimally, the sponsors must be transparent about risks and profits from the project. Point number 5. Get to know your sponsor's team. Ask the real estate sponsor about the details of their accounting team, legal team, construction team, property management team. Make sure these entities are all legitimate and have a good reputation. Number 6. Projections. All the numbers mentioned in your private placement memorandum or PPM about how much money is required to renovate the property and how much profits the property generates, these are all made on assumptions and projections of the sponsor. So it is important for the sponsor to have vast experience in order to make accurate predictions, allot adequate capital for buffers or contingencies, and understand market dynamics to predict the cash flow and sale profits many years down the lane. Even a small error of judgment at this stage can lead to very unfortunate financial outcomes. Do not proceed further with the project until you thoroughly understand all the numbers. Ask the sponsor how they came up with the numbers and what is the basis of their assumptions. Number 7. Does your sponsor have skin in the game? It is important to make sure that your sponsor interests are aligned with your interests. You know that the sponsor has skin in the game when the sponsor invests their own capital into the project. Know how much they invested. The bank loan for the syndication deal is personally secured by the sponsor's assets. The distributions from the cash flow are distributed as a preferred return to the investor. What that means is the sponsor will make money only after the investor makes a certain percentage of the money. These points will make sure that the sponsor has adequate motivation to make the project a financial success. Number 8. Google search. It is not a bad idea to perform a quick Google search to learn more about your sponsor. Google can sometimes surprise you with more information than you anticipated. Google reviews, comments on forums, and prior legal troubles. Pretty much everything can surface on Google if you know where to look for. Number 9. Asking open-ended questions. This will put the onus back on the sponsor to try to come up with legitimate answers and give you their perspective. Focused or targeted questions will often lead to scripted and rehearsed answers. Number 10. Be cautious of false promises. Few sponsors use phrases like guaranteed returns, which is not often possible. Sponsors often do this to attract investors. Beware of this. Ask what they mean by guaranteed, or how they plan on keeping their promise. Ask what happens to the property in the event of a market downturn. Point number 11. Risk mitigation. Discuss the sponsor's plan for unforeseen circumstances. What happens if the sponsor has a health problem? What happens in case of a market downturn and the property doesn't make as much money and the property cannot be sold for a profit? What happens in case of a natural disaster or a lawsuit on the property? Point number 12. Contingencies and buffers. Did the real estate sponsor account for any contingencies and buffers? Sponsors usually have capital allotment for unforeseen expenses, that is, sudden roof leaks, etc., also known as unexpected expenses, so that they don't have to go back to the investors to raise more capital in the event of these unexpected expenses. Number 13. Additional capital requirements. If additional capital were to be required halfway through the construction and all the buffer funds are used up, what happens next? Do the investors have to chip in more money? If the investors do not want to contribute additional capital, can they have the option to dilute their stock instead of contributing the capital? Number 14. Financial documents. Ask the sponsor regarding who will be preparing the financials of the projections and the actuals once the property is up and running. The financials must be prepared by a trained person, preferably CFO level, and must be shared with the investor in a transparent manner every month or every quarter. Since an average investor does not understand the fine details of the financial documents, there is a lot of wiggle room to play with the numbers and make them work in favor of the sponsor. The trick is for the investors to ask any and all questions they might have. Number 15. Capitalization policy. Make sure the syndication team has created a capitalization policy. This policy helps you understand what was written off and what was capitalized on the balance sheet. It is a way to ensure proper planning and transparency. Point number 16. Tax benefits. Ask the sponsor regarding tax benefits for investors. What tax deductions will be transferred to the investors? When can an investor expect a K-1 form? Point number 17. Profits and timing. Ask about the cash flow distribution percentages. Ask if the investor distribution returns are preferred or non-preferred. Frequency of payouts, refinance profits distributions, etc. Ask when exactly the profits will start rolling in. Will they be coming in immediately or after a few quarters? You must know this and hold your sponsor accountable for this. Point number 18. Investor updates. How often will the investor be updated on the project's progress? Usually, investor updates are held by syndications every month, sometimes every quarter. These are used to communicate updates regarding the project's financial performances, steps that will be taken to improve property performance, etc. Point number 19. Retirement accounts. Does the syndication structure allow their investors to invest with their retirement accounts? If so, the sponsor's attorney has to make sure this is all done by the book and follow regulations. Last point, point number 20, time commitment. Are the sponsors working on more than one project at a time? Investors need to make sure that the syndication has the sponsor's undivided attention or at least has a dedicated team who is attending to this project. Overall, this is a pretty exhaustive list, and it was not meant to overwhelm the investors. This is to make sure investors cover all their bases, make safe and informed investment choices. There are too many people out there looking to scam the investors, and we want to make sure we do all we can to protect investors' wealth and facilitate their investment via legitimate channels. Let's move to the next topic. How long does it take to perform due diligence on your real estate sponsor? The whole process of due diligence might take at least a few weeks to a few months to be thorough. If you're not satisfied with the results of your due diligence, you must take it seriously and stay away from the syndication opportunity. Very often, investors are subject to something called FOMO, F-O-M-O, or fear of missing out. When it comes to such investment opportunities, this FOMO makes the investor make bad choices. Just remember that if this deal or project does not work out, there is always another project or opportunity tomorrow. Don't just invest due to fear of missing out. Make smart choices. How much does it cost to perform due diligence on your real estate sponsor? In order to perform a thorough due diligence, it usually does not cost anything in money for the initial process. It will, however, take up a lot of your time and effort. Being busy in the hospital, it is not easy for physicians to make multiple phone calls, attend meetings, spend time looking at numbers, following up on numerous emails related to the project. That being said, if you want to invest safely, if you want to make sure you stay away from fraudulent people or teams, there is no shortcut to it. You must put in the initial time and effort to learn as much as you can about the syndication and the sponsor. Once you have completed the initial due diligence process, if you decide to move forward with the investment, you will need to evaluate the private placement memorandum. This is the legal document of the syndication project. You will have to hire an expert real estate attorney to perform this review. This usually costs somewhere between $1,000 to $2,000. If you decide to invest into a syndication via your LLC, you have to open an LLC and have an operating agreement for the LLC. Setting up an LLC costs around $200 American dollars. Setting up an LLC costs around $200 in addition to the state-specific filing fee, which varies depending on the state of entity formation, and another $1,000 for attorney to create an operating agreement. In conclusion, make sure you work with the right people. Take your time to get to know them. This will make or break your deal. If you made it to the end of the article, it means that you're strongly considering investing money into real estate. Now that you have learned about the due diligence process and vetting sponsors in real estate syndication, get started with evaluating syndication deals on your desk and reach out to us if you have any questions or if you need any more resources. Well, that should be the end of the topic. Thank you for listening to another episode of PhysicianEstate podcast. In the next episode, you will be learning the difference between an excellent real estate syndication deal versus an average real estate syndication deal. To receive more information on real estate resources for physicians and to get updates on real estate investment opportunities with PhysicianEstate, please subscribe to our newsletter at PhysicianEstate.com. Do not forget to take advantage of our 2 new eBooks, ABCs of Real Estate Syndication for Physician and How to Avoid Medical Malpractice Lawsuits. Signing off for now, this is your host, Dr. Harsha Muley. Until next time, make wealth and keep wealth.
Disclaimer: I am not a legal advisor or investment advisor. The content in this podcast is not investment advice. This is my personal blog, and all the content found here is for informational, entertainment, or educational purposes only. It should not be construed as personal investment advice.